Following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, Friday morning. We got about 25 minutes to go until the opening bell. We have markets in negative territory. Quite the week we've had in tech earnings, folks. I'm going to take a look at the Nasdaq 100. Right now, you get the Nasdaq 100 down 111 points. That's about 0.8%. We're trading right near the acceleration we got yesterday to lower prices. That is on the heels of about as strong of an earnings week as you can get when you look at these tech stocks. And all we've done is consolidate around. I mean, Apple may be the most mind-blowing of them all in terms of the quarter they put up, in terms of the beat and the expectations they put up. $90 billion they've added to their share buyback, and you're trading at a price point that we were trading at 8 months ago. How does that make sense, folks? I mean, you say that maybe everything is factored into the price, rightfully so, when it trades the way it did yesterday. I mean, look at that red bar on a daily basis, right? Just zooming in the action that we've had since the highs that we made in September. That high in Apple, 137.98. Right now, we're trading at 131. 131. We're lower on some of the EU antitrust news acceleration yesterday. So you're going to open right now. The lows that we had just even in the last 8 or 9 days, you're looking at a price level of about 131.41, just below where we're trading at right now in Apple shares at 131.79. Interesting action. Not sure how it all gets priced in terms of the buyback, everything. But keep in mind, Apple was trading as low as $53 as recently as just over a year ago. Okay, you were trading pre-pandemic levels of $80. Still a substantial increase from that level. You have Apple trading well above $2 trillion market valuation. Remember when all the discussion was who was going to be the first $1 trillion market cap? Far above those levels right now. Okay, what else we got going on? U.S. personal income. How about soaring by the most on record? That's what happens when you get a little fiscal stimulus to the people that need it the most. Personal income soared in March by the most in a monthly records back to 1946, powered by a third round of relief checks that also sparked a sharp gain in spending. 21.1% surge in incomes. Staggering. Followed a 7% decline in February. So you get a 7% drop in February, 21% increase in March. Purchases of goods and services increased 4.2% last month. Economists were looking for a big number anyway, 20.3%, and they were looking for 4.2% in personal outlays, so pretty close to the expectations, a slight beat across the board. That on the heels of the $1 trillion American Rescue Act passed in March. The March data showed transfer receipts that include stimulus checks and unemployment aid nearly doubled from a month earlier to $8.2 trillion. Wages, meanwhile, rose modestly in March. Inflation adjusted. Personal spending increased 3.6% in March after a 1.2% drop in February. Goods outlays climbed 7.3%, while spending on services rose 1.7%. How about this number? The personal savings rate jumped to 27.6% from 13.9%. There's a lot of savings. There's a lot of pent-up demand. Where that pent-up demand goes, that's what we're about to find out. Disposable income, so that's going to exclude taxes, and are adjusted for inflation, surged 23% in March. It's a lot of disposable income that's going to want to be spent as this economy really opens back up. A separate report Thursday showed that GDP expanded 6.6%. They're going back to the GDP number that we just got. Big numbers across the board when you look at it, personal income and personal consumption there in a big way. All right, what else we got going on? We got some earnings this morning for some of the oil companies. We have oil pulling back a bit. Exxon, they post a profit. They snap a 4-quarter loss streak. They earned $2.7 billion during the period. Earnings per share of 65 cents. excluding items on $59.15 billion. We'll just jump over and see how they're trading a bit this morning. You have Exxon shares basically flat. That's a weekly, but you're pulling on a 5-minute. We're trading at 58.65. We closed at 58.94. We got Chevron numbers this morning as well. CVX, they're lower from 107 to 104. Chevron posts a profit, raises dividend as oil price recovery lifts quarterly results. Not all rosiness in here, though, as we're trading a little bit lower. 90 cents per share during the period, revenue at $32.03 billion, EPS in line with analysts, revenue slightly ahead. Oil equivalent production dropped 4% year over year, 3.12 million barrels a day. Nonetheless, about 3% lower for Chevron ahead of their opening. Burger King parent Restaurant Brands International, QSR, I believe is their symbol. Is that right? Let's see where we're going. QSR, correct. Out with their numbers this morning as well. Earnings per share, 55 cents versus 50. Revenue, a slight beat at $1.26 billion. And the company trading a little bit higher today. I was jumping over McDonald's. We have some McDonald's in my newsletter, Rocket Equities and Options Report. So there's your restaurant brands. You back things up to a 3-year weekly. I mean, all these restaurant companies, right? Down to $25 this morning. We're going to open barely a positive at about $68, right where we were prior to COVID, as if it didn't even happen. McDonald's. Quite the acceleration. I've talked about this before. Potential ABCD in McDonald's here. We're looking at an A point of 178, a B point of 231. We accelerated higher on a weekly basis with more shares than the 10.7 we had at the B points. McDonald's, we were just trading at 202. You're up at 235. Quite a run for some of these companies that we've had. But guess what, folks? When you get the type of stimulus that we're getting, it's going to be spent. Walmart, we also have some Walmart in my newsletter. Walmart, quite a pop when you look at where they've been from 126. We're going to open about 139. And let's see how Amazon is continuing to trade right now. Amazon, really interesting. What are we trading at right now? We're trading literally to the tick at the all-time highs of Amazon, 35.52. Right now, you get a bid in Amazon of 35.52. I imagine we're going to find out in about 18 minutes, maybe 17 minutes to be exact, where Amazon trades. But we're literally going to open with a bid-ask straddling the all-time high on Amazon shares. And why not? Let's get into the Amazon numbers because they are staggering. And most importantly, what do they expect in the future? Well, they expect in the future that pandemic-fueled shopping frenzy is going to continue. Big bets on recruiting and warehouses are paying off. Despite strong results, the company touted good works. Not sure what they're talking about there, but getting into the numbers. How about this number? First quarter revenue jumped 44% to $108.5 billion. Earnings were a record $15.79 a share, exceeding analyst estimates for the quarter ending in June. Amazon projected sales between $110 and $116 billion for the quarter ending in June. I mean, just staggering. It's going to keep going. That's what they're saying. They're going to have a bigger quarter in June than they had this quarter. Fantastic quarter. One analyst out there talking about. And they were a lot higher. They've pulled back. So let's see what they say. Amazon said Prime Day, the company's shopping bonanza for members, will take place in the second quarter. That may help the company's spring results look rosier compared with the period in 2020. So they're going to have a nice run in the next quarter as well, as they're going to bring Prime Day in there when they did not have a comp with Prime Day the previous year. That's something to keep in mind when you're going to see those comps on Amazon. They're going to be dealing with a Prime Day segment, comparing it to last year when there was no Prime Day going on. They were just trying to get packages for normal business to people in terms of what they were sending out last year. So they held off on Prime Day. Cloud computing and advertising businesses, that's a big margin business for Amazon. Still growing rapidly. Sales of Amazon Web Services climbed 32% to $13.5 billion. So interesting, AWS, only $13 billion of $100+ billion that they're taking in. But that's the growth, growing 32%. Stay tuned, folks. We'll finish up the discussion of Amazon when we get right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps negative by 24 points right now. Nasdaq 100 off 103, Dow off 167, Russell off 22. Keeping the conversation on Amazon for a moment. Right now we're trading at about 35.47, chopping around where we've been since about 6:30 this morning. Some of the spend that Amazon has going on, they're building quite an infrastructure, folks. And disclosure, I had some family, got some Amazon. Everybody's got some Amazon in some way if you're in any type of an index fund in a big way. But Amazon, the type of money that they're spending to build out the infrastructure they have, I mean, they were scooping up airplanes, just even, a story that's not even talked about at some of the pandemic lows where you have airlines unloading airplanes, Amazon scooping that up. How about growing its capital expenditures 80%? Over a trailing 12 months in a big way. Amazon really upping the ante in terms of how they push things out with their own infrastructure. On an earnings call with investors, the CFO said the company's capital expenditures, which include things like logistics expansions and the cost of data centers, increased a whopping 80% over the trailing 12 months. While the pandemic pushed many businesses to slow spending, Amazon plowed those profits back into physical expansion, growing its transportation and logistics presence across the country. They added more warehouses and grew its fleet of airplanes, there you go, and trucks. Continues to grow its contracted delivery network, often distinguishable by those Amazon-branded vans, to see 100,000 plus drivers. All told, the company increased capacity of its in-house logistics operations by 50% year over year. Staggering. I mean, think about a year ago, how often you saw those vans. Right now, 50% greater capacity for logistics within that operation. They expect to keep spending big in those areas throughout the remainder of 2021 and potentially into 2022. I'll tell you a personal story. Now, Walmart. Full disclosure, I got some Walmart. We got some Walmart in Rocket Equities and Options. Walmart, a great company, I think, even at these values. You got a strong company pushing out a dividend. Right now, you're talking about a Walmart company that is valued at, when you get into the fundamentals tab, about $400 billion, give or take. Contextually wise, if you really started to make some impacts in terms of serving clients, whether it's the Bank of Walmart, right? Some growth opportunities when you have a relationship basis with so many citizens within the U.S. and abroad. Walmart, when you compare about the logistics that you have of a company like Amazon, right, delivering this type of number in terms of 100,000 plus, okay, and the amount of money they're spending. Walmart, I was making Sam's purchases. So Sam's, kind of the Costco of Walmart. The process delivery that a company like Amazon has, we almost take for granted right now. I'll tell you a story. I was ordering products on Sam's. So I ordered, for those that don't know, just had a son in February, about to turn 3 months May 2nd. So we're ordering diapers, right? You're ordering some diapers, you're ordering some wipes, a bunch of heavy products, right? Heavy products, and ordered some popcorn as well, ordered some paper plates. Number one, they were putting food items that could be easily crushed in enormous boxes, the size of almost mammoth suitcases, right? These enormous boxes would show up, almost like shipping boxes on my front door, and they would contain literally every item I had purchased with that whole order. And so it'd be like 3 boxes of diapers along with a bag of Smart Food popcorn that then got crushed and exploded everywhere. Point being, Amazon has spent the money. And I said to people in my house, I said, Walmart has to spend a lot of money to really get their acting gear, because it was remarkable that they were failing so miserably to deliver products the way Amazon almost takes for granted. I said to myself, this would never happen. I'll tell you a second story. I ordered paper plates, okay? And this is all going to speak to the fact that Amazon is spending so much money to stay ahead of everybody. They have their own delivery network, let alone just the process they have in place to deliver items that we take for granted right now. I had ordered paper plates as part of an order through Sam's, okay? And this is all said with the fact that Walmart has some room to make up, and they can make up. And then when they do, they might have a valuation greater than $400 billion for the type of business that they do. Paper plates, all right, a big thing of paper plates from Sam's, had ordered it. It literally showed up at my front door, not even in a box, just a bag of paper plates placed on the front of my door with no shipping item or anything like that. And it looked like it had been scuffed dramatically. So I'm not going to eat off those paper plates. Not sure how that even happens for a company like Walmart, right? I speculate maybe one of the boxes opened up. Maybe the driver found this one item in their truck at the end of the day. They ran through the possible boxes that they had. This is all a speculation, but how do you just have an item show up without even a shipping label at your front door? This is the type of stuff that Walmart, a $400 billion company, is doing. You've seen, though, part of the reason why Walmart's pulled back is because they've talked about they have to spend a tremendous amount of money to increase the processes, which I think will pay dividends. Well, that's what Amazon's been doing for like 10 years, folks. All right, and they are leaps and bounds ahead. We're trading at basically all-time highs today on Amazon. Long term, and like I said, I'm biased, I am an owner, but when you see that type of spend and that type of increase to the logistical network, let alone Amazon Web Services and what they do for a number of companies, Walmart has a long way to go to catch up, but those types of spends, it is so tough to compete with a company like Amazon, and we almost take for granted what they've done in terms of the reliability. Everything shows up. It's in a nice little box, right? Amazon would never ship you a box that's the size of a small car with every single item you've ordered in it, and you have all these big items crushing these small items. I couldn't believe it. Popcorn, and of course the bags shattered. There's popcorn everywhere in the box. There's popcorn in my house. It made no sense. And the bag, with the plates ordeal, there's been a number of times. They just don't have that process in place at Walmart like Amazon does, and Amazon is spending the money to stay ahead. And we've seen it. I mean, they are right now. Amazon is about, I think, a $1.7 trillion company coming into yesterday's number. $1.78 trillion company coming into yesterday's number. But they dominate in a big way. I mean, interesting. They're 4.5 times the size of Walmart right now. But Walmart's got some making up to do if they want to catch up to Amazon in any way. Target shares. Let's see. What do we got? Target shares right now trading at 207.38. We're off a bit, but Target. Now, you contextually wise, just comparing it, the conversation with Amazon to Target, some of these companies here, Target, only a $100 billion company, right? Amazon, much different company, $1.7 trillion. Amazon Web Services and everything involved. Prime, But boy, the run Target's had, Target probably can catch up a little bit to even Walmart as they've increased their brand, their presence, their online delivery, and the likes. You get Target trading at 207. This one, my goodness, you got to back it up all the way to a 3-year weekly to see Target trading at $60 as recently as 2018. We made it all the way down to $90 on the COVID lows. We're trading at 207 right now. All right, what else we got going on? Let's see what we have in terms of equities. What do I got up here? Personal income. Talked about Amazon spending. We had Exxon out with their numbers. Let's touch on Apple a little bit because we touched on it at the top of the program. So the EU says Apple's App Store breaks competition rules after a Spotify complaint. I think it was just like 4 years ago that the EU went after Apple already and had them paying billions of dollars for something to the likes. So the European Commission, the EU's executive arm, opened an antitrust investigation into the Apple Store last year after the music streaming platform Spotify complained in 2019 against the license agreements. The agreements mean the app developers have to pay a 30% commission on all subscription fees that come through the App Store. It's a tough argument to make that Apple doesn't have some type of monopoly on their App Store when basically they serve 1 billion plus people. It's a duopoly in terms of Apple and Android, and they charge 30% across the board. Android's got fees too, though, but you're going to see this play out the market. Not liking though Apple. Going to open at a low for the week right now at 132.04. Stay tuned, folks. We'll be right back from the market open.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have markets open. We have the S&P negative by 25 points right now. We have the Nasdaq 100 off 106. S&P is trading at 41.79. Let's jump over to Amazon, see how they're trading on the open. 35.10, pulling back a bit, only up about 1.1%. Remarkable if you think that they could go negative after the acceleration they had last night. Much the same that Apple. We'll jump over to Apple, dealing with their own woes of antitrust this morning. Apple down 1% today after finishing actually in the red yesterday. We opened at 137. We finished yesterday at 133. Let's check over Facebook. They were out with their numbers earlier this week, holding steady at about 326. We'll check out some of the other Fang stocks. Google holding above 2,400 right now at 2,405. And we'll jump to Twitter shares. Not much the same. As in Twitter down 13.5% right now on their numbers last night. And Twitter, not a huge miss, but what they did miss is any of the growth that the other tech stocks had this week. Sales gained 28% in the first quarter, fall short of the larger peers. They had a tough act to follow, and they disappointed in a big way, basically just coming in line with what the expectations were when you had some of the other tech companies beating revenue by 10+%. Revenue gained 28% in the quarter, in line with analyst estimates, but notably lagging behind the growth at some of their digital advertising peers. Facebook and Alphabet's Google this week reported quarterly sales that smashed the estimates. Twitter just came in line. Twitter said sales will be $980 million to $1.08 billion in the period ending in June, basically right in line with the $1.05 that the market was looking for. Twitter saw a rebound in advertising in March, and if that trend continues, the company would be in the high end of that guidance. High end is still $1.08 billion. Market's looking for $1.05. The social media company relies more on big brand advertising, which make up 85% of its total sales, and doesn't make as much money from direct response advertising, which encompasses many of the retailers and small businesses that have flocked online during the pandemic to Facebook, Google, meanwhile make the majority of their advertising in those types of ads. Really interesting when you break down that difference there. Twitter, super reliant on large, big brand advertising. Facebook and Google basically open to the entire spectrum of retail, small businesses, and that making up the big acceleration they saw to higher prices in Twitter shares. Paying the price today back to 56. You put Twitter on a daily, and we're back almost where we were. Remarkable. The high of $53 all the way back in October to Twitter. We might give it all back off the high of about 81. We'll jump to Facebook, see how they're doing on the open. Facebook right near all-time highs of 327. We'll jump back to Amazon to see the action. Amazon up 1.3%, but not. It's under all-time highs. Remarkable. You're going to see a little bit of a pushback on Amazon after the quarter they had, basically at all-time highs. Let's check back in on commodities. We'll see the action on crude. Crude slightly lower at 63.58. Gold holding steady about 17.67. We'll check in on notes and bonds right now. Pretty flat at 132 right now. You're looking at a 10-year yield of 1.63%. Over in Europe right now, you have the DAX got positive territory, up about 0.3%. FTSE up about 0.3% as well. Asia negative. Nikkei down 0.8%. Shanghai down 0.8% as well. Okay, what else we got going on? Let's jump to a little bit of sports. How about the draft last night? So, a little bit biased to the New England Patriots, but interesting. Front page of ESPN. I mean, the Pats get a lot of headlines anyway, but they got one of the guys that they were probably hoping would fall to the 15th pick as the Patriots pick up a quarterback from Alabama. The Pats got their guy. A few teams may have reached a little far, was the headline out there. You have Trevor Lawrence, the Clemson quarterback, going to, I believe it was Jacksonville. Yes, Jacksonville, the Jags, they take the ex-Clemson star, Lawrence. And then you had Chicago. They trade up from the number 20 pick to the number 11 pick and draft the quarterback out of Ohio State, Justin Fields. Some interesting action. The Patriots, they get their Alabama Crimson Tide QB Mac Jones with the number 15 pick. Be interesting to see how that plays out. The Patriots, they already got Cam Newton in their stable of quarterbacks, and they're going to have a little bit of a stable of three to see how that plays out as the Pats try and find their successor to the one and only Tom Brady. The draft last night, round one. Tonight, I believe you get rounds 2 and 3, and they finish it up over the weekend for their draft. One other, we'll call it a public service announcement. Interesting. If you have a pool, stock up on some chlorine, as it looks to be a drought in chlorine this summer. Major chlorine shortage set to spoil summertime fun in the swimming pools. Homeowners start to prep swimming pools for the season. They're going to face a widespread chlorine shortage. Some parts of the country, you already have stores imposing quantity restrictions. In other areas, prices are just doubling. So you had a pandemic swimming pool boom. We're all familiar with that. You also have a chemical plant fire in Louisiana and knocking out some of the production offline. That's going to result in a shortage. If you got a pool out there, stock up on some major chlorine out there. And, they're talking about no love for the Jets in the den. Well, we got some love for the Jets. I like playing the Jets, not really love for the Jets. The Jets, they got their own saga, right? They scoop up a quarterback. They trade their quarterback, Sam Darnold. They just scooped him up with the number 3 pick. Bringing it back to football for a moment, but it is interesting how often some of these teams have to go back to the well and spend a top pick right after they pick a quarterback. But if it's not the guy you want, then maybe you just got to live with that and move on. Darnold, it was just 3 years ago that they spent the number 3 pick on Darnold. They ship him out in the offseason. They get their new guy. The amazing thing about the NFL, nothing like baseball in particular, is that contracts not guaranteed in the NFL. And the NFL, the ability for teams, because they have to manage a hard salary cap, when you're able to get a player like a quarterback who is notably usually one of the more expensive players on your team, and if you're able to get that rookie contract for your quarterback and he's able to contribute to the team, and then you're able to build the rest of the team using the salary cap in ways that you can't when you have a perennial quarterback, then that changes the whole dynamic of your ability to make up the team with more salary when you're able to secure some of your biggest name players on their rookie contracts. That's some of the times that the teams have the best shot at making a run for a championship. You have a quarterback maybe on like the second or third year of their rookie contract. They're still not making probably what they would be if they were getting fair market value in the NFL. You're then able to use the salary cap across the rest of your team and fill it out, as they're saying, the KC model, right? I mean, Patrick Mahomes, I think he's already gotten his contract renewed, but on his rookie contract, there was just such ability to have star players around him. One of the reasons why I think you saw the Jets push out their quarterback, Sam Darnold. They get a new quarterback, and they get to reset that rookie contract. All right, there's our football coverage for the day, and we'll go back to the markets and see how we're trading right now. What else we got going on? Let's jump to some of the stocks we have with moves this morning. So we covered Twitter. Skyworks out with their numbers as well. They beat estimates by 2 cents a share. This stock has really run recently. Quarterly earnings of $2.37 a share. Semiconductor components saw its revenue beat forecast. The shares, though, how about turning down 8% after giving outlook that disappoints? Yeah, I'd say it disappointed some investors. SWKS is their symbol. We're down 7.7% on their numbers. I mean, look at the run we've had, though. We're only back, folks, to where we were trading at 8 days ago. Last Thursday, right? Yes, last Thursday. You pop higher. Thursday to Friday, we're trading at 182. Skyworks probably got a little ahead of itself on their run from 204, and really, you got to back it up all the way. We were at a low in Skyworks. How about $67? And you're still sitting triple that valuation right now at $182.50. All right, folks, we got the S&Ps sitting right near all-time highs of 4180. We're down 22 points. Stay tuned. I'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P is still down about 20 points right now. I got a chart of a monthly chart right now on the S&Ps. Today, the final trading day of the month for April, and it's going to be quite a month no matter what, folks. We had not seen 4,000 in S&P futures, and currently trading at 4182 right now. You were as high as 4211. We were shy of 4,000. You're talking about putting in, we closed out. When you look at where we were in March, we close out that level of 39.66. You're trading up about 220 points right now, more than a 5% pop in the S&Ps. Pretty interesting when you put this thing on a monthly, right? It took all but 3 weeks, which is green across the board. You put this thing on a weekly, just for context, in the full run, it only took 3 weeks of negative action for the S&P to go from 3,400 down to 2,100. We got one reprieve there the week of March 2nd, a little bit of a pop before it continued lower. But, man, since then, it has been a one-way rocket ship to the upside. On a weekly basis, yes, we've given back some of the gains as we're down 20 points right now, trading at 41.83. I'd say the most remarkable thing, though, is that how this trend continues in terms of where we go from here. You couldn't ask for a better week from some of these tech stocks. And to have Apple right now, when you put Apple on the daily, trading at 132.22, that means the expectations, as many have talked about, just through the roof for some of these tech stocks. Now, you've seen some of them really push the limit in terms of Google. Quite the acceleration Google continues to have. We're up, we're down 0.5% right now in Google at 24.17, but we're within about $30 of all-time highs. Facebook, the other notable one, really popping higher this week to 328. And on the flip side of that, we had Microsoft, a little bit of a pullback. All things considered, though, Microsoft, you're just back to where we were at the beginning of April, let alone March 31st. You were trading at $232 in Apple. You're $18 above, Microsoft. You're $18 above where we were there. And let's check back in on Amazon shares. Amazon, 35.11, up 1.1%, but under the all-time highs. We'll see if Amazon can catch a bid as we bump up to the 35.52 price point. Okay, what else we got going on? Western Digital, they report quarterly profit of $1.02. Market was looking for 68. The disk drive and flash memory company's revenue exceeding forecasts. Stronger memory chip prices among the positive factors. They are positive. That was pre-market. Let's see how we react on the open. Western Digital up about 3.6% today on their earnings. Clorox. So we were talking about chlorine potentially. They are lower they cut its full year forecast to a higher commodity and freight costs. You're seeing it. Any company that's missing, that's a trend. Higher costs of what they're doing business in. They beat estimates for the latest quarter, but revenue below analyst forecast. CLX is their symbol, and there you see it, down about 4% to 178.40. We're touching right near the lowest we had on Clorox on March 3rd at 176.73. And Texas Roadhouse, yeah, so TXRH is their symbol. They were trading higher. Let's see if they've gained that, and they have, up about 3.8%. Look at this chart. Some of these companies, man, pre-COVID, you were trading at about $64. We did pop just higher on their earnings in February before the market really fell apart. You go from about 65 down to 25. Talk about an acceleration on a weekly basis. This thing just has not stopped. We'll put it on a daily. Texas Roadhouse, even a 5-year daily. What do we got? 5-year daily. We'll zoom in on just COVID and beyond. And yeah, from 25, it's a solid trend. We're actually rising above that trend right now to 108. Right now, when you look at the company, you're talking about a company that's valued at $7.5 billion on their earnings, and Texas Roadhouse gaining in the free market, beat estimates on the top and bottom lines. The company announced it would resume paying a dividend. Talk about coming a far way from where we were just a year ago. All right, jumping around to what else we got going on. Let's see. We're going to jump around to Coinbase now. Some of these venture capitalist firms. So how about Union Square Ventures founder Fred Wilson turning $2.5 million in 2013. Now, folks, you got to imagine 2013 sinking $2.5 million into a crypto exchange. That's definitely a high-risk wager for millions of dollars. But you want to talk about some paying dividends for that risk? How about $4.6 billion? $2.5 million turned into $4.6 billion. Coinbase right now, we'll pull up Coinbase. You're talking about trading at $300. Right now, that company valued at about $60 billion. Yes, 59.67 to be exact. So his share of that company, $4.6 billion. Not sure what used. So they're using the $328 price point for that. But nonetheless, almost like a 10% stake, maybe a 7 to 8% stake. If you value that at $2.5 million, maybe the company was valued at $30 million or so at that time in 2013. Excuse me, but then you jump over to Bitcoin to bring it full circle. Now, Bitcoin on this chart is only going to go back to 2018. I'll have to pull up a chart at the break because 2013 prices, I think we're pushing like $200 or something at Bitcoin. So yeah, you create an exchange for a product that's trading at $200 at that time, and that product ends up being worth $60,000 at that time, and you have public companies sinking $1.5 billion into that crypto. Yeah, but that's quite a staggering return, right? $2.5 million into $4.6 billion. Not sure he envisioned that Coinbase will go public at potentially $100 billion in less than 10 years. But nonetheless, that's where we are in crypto right now. You got Bitcoin. Now, Bitcoin, putting this thing on a daily, we saw a full 50% pop from the full pullback you got from 65,000. Ironic. The day Coinbase goes public, right? Bitcoin makes an all-time high, almost like you had some demand in crypto going into that day, wanting to keep that price high to get some demand in Coinbase. We pull back to 47,000. We then bounce right to the 50% retracement level of 56,500. We're chopping around that level right now. If that is an A to B, C to D, you're talking about $18,000. 18,000 off 56. That would bring us to 46, about 36,000. And 36,000 on this chart, kind of the area where you began to chop around. Not sure how the market would react if you got to pull back to that level. But folks, they're all kind of arbitrary levels at this point. You know, as in, what's a Bitcoin versus 35,000 versus 55,000 versus 75,000 versus 200,000? It's just what somebody's willing to pay for it on that day. It's part of the reason why we've seen a rise from just in September of 10,000 to now seeming like 50,000 is the new benchmark norm for Bitcoin. Interesting nonetheless. We'll see how it plays out, but volatility persisting in a big way on Bitcoin. And this market, don't call it a comeback just yet, folks, but we're a little bit of a bounce. We're now above where we're trading our pre-market. You see buying the dip yesterday worked out. We were just down near that level in terms of the lows of 41.75. You made it to 41.70 yesterday. We're trading at 41.85. And tech stocks catching a little bit of a bid too. You got 13,883. Let's jump around to some of the Fang stocks and see how they're trading. Apple shares clawing back some of the losses, 132.32. Microsoft shares pretty much flat from the open at 250. Facebook shares catching a little bit up to 328. Netflix shares catching quite a little bit at 507. We'll talk about Disney real quick. They're not a Fang stock, but I love looking at them. And we're going to tease a little bit. We're going to talk about Uber when we come back after the break. You have Uber up 1%. You see the drop they had yesterday. Check out that drop from 59.22 to 53.11. Uber was down about almost 7% yesterday. I've been a bull from Uber for a while. We have some Uber in Rocket equities and options, and I'm going to go over that drop in a minute when we get back from the break. Talking Uber, we'll take a look at Lyft as well. Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have Uber shares right now up 0.8%, trading at $55.39. You put it on a daily. This thing's been chopping around between about $50 and $60 going back to the beginning of the year, January 1st. We first rose above $50 almost on November as this company, one of the biggest accelerations once we got some efficacy numbers on the probability of overcoming this virus and opening the economy back up. Uber accelerates on November 1st from about $33 up to $64. We're trading at 55. So the news yesterday was the Labor Secretary, Marty Walsh, talking about potentially classifying their workers. A lot of cases, gig workers should be classified as employees. What I'd say to you here, folks, is we still have some Uber in my newsletter. Long term, there's still a dramatic room for appreciation in Uber share price when you look at Uber Eats and how they've accelerated things through the pandemic and then just the company itself. And just because you have a labor secretary who I have no problem with in general, President Biden, I'm a fan of as well. I think that comes across sometimes. But that doesn't mean you have to be partisan on everything, folks. I've said before, I think that, I understand the quest for workers to have livable wages, but it seems pretty cut and dry. A company like Uber offering up gigs for workers to come take. Do you want to run a ride? We have a ride. We need a contracted employee to usher this customer from one location to the next. You can be an Uber driver. You can offer your services to Lyft. You can offer your services to Instacart, I believe. And you already had basically the most liberal state in the union, California, vote on the fact that they want these workers to be classified as contractors. Point being, just because one person says that, you have Uber trade down 6 to 7%, folks. If you're looking to get in this equity, it might be a time to dabble. I really would. I mean, you're back to December 4th prices. And even if you think you're going to get some potential for that, it's going to be challenged in the courts. We have a pretty conservative Supreme Court. We have the most liberal state on the union already voting that those citizens want these workers classified as contractors. So I think it's a little overblown. Uber traded lower yesterday, bouncing a bit to some of those. You had Lyft in the same deal, trading lower yesterday. I'm a much bigger fan of Uber than Lyft, just because you add in that food delivery business. It's quite a business in a big way. Thanks so much for tuning in, folks. Stay tuned. Basil Chapman's up next. Live programming all Friday at TFNN. Have a great day, folks.